Welcome back to the Daily Crypto Roundup, your trusted source for everything moving the market. If you've been following us this week, you already know crypto's been on fire. Bitcoin smashed through $126,000 yesterday, Ethereum hit fresh highs, and altcoins have been roaring. But today, things have cooled off just a little. Prices are slipping, sentiment's pausing, and traders are asking, is this just a breather or the start of a pullback? We'll break it all down. Bitcoin's cooling after its record run, Ethereum's flashing a short-term retrace pattern, and analysts say it's a healthy reset rather than a reversal. We'll also cover Tether's surprise move into Italian football, a new S&P index linking crypto and Wall Street, a social program in New York that's literally handing out stablecoins, and the mining sector's pivot into AI. Plus, we'll close with what this mini-dip actually means for the next leg of the bull run. Before we jump into the market numbers, I want to take a quick second to shout out one of our regular listeners, RR84. You've been showing up in the comments nearly every episode, always adding value, always supporting what we're building here. We see it and we appreciate it. We also want to take a moment to show our appreciation for all of you that listen to the podcast. We couldn't do this podcast without you. Now, let's get into today's market prices. Bitcoin is trading around $118,900, down just over 5% in the last 24 hours, as traders take profits from last week's surge. Ethereum is sitting near $4,420, down about 5.2% after briefly testing $4,700. Solana's pulled back to around $223, down roughly 4.8% on the day. XRP sits at $2.86, down about 5%. Cardano is trading at 83 cents, slipping 5.1%. Avalanche has fallen to around $29 even, down 4.7%. Dogecoin's hovering at 25 cents, off nearly 5% as momentum cools. Tron remains relatively stable at around 33 cents, only down about 3%. Chainlink trades at $21.80, down 4.9%, and Litecoin rounds out the top 10 at $112, down just under 5%. So, what's behind the red candles? There's no single trigger. This looks like a classic cooldown after a euphoric run. Bitcoin ETF inflows have been massive, almost $6 billion in a single week. And when numbers hit extremes like that, traders take profits. Add in the uncertainty from Washington with the US government shutdown, and a bit of rotation back into cash, and you've got the recipe for a pause. Ethereum's chart shows the same rhythm. Technical analysts are pointing to a potential 5 to 6% retrace before the next leg up. They're calling it a healthy reset, a chance for leverage to unwind and new support to form before another breakout attempt above $5,000. Despite the short-term weakness, the larger story hasn't changed. Institutions are still buying, ETF inflows are still growing, and adoption is accelerating faster than ever. And that brings us to today's first major headline. Tether, the world's largest stablecoin issuer, just bought a 10.7% stake in Juventus Football Club. One of Italy's biggest sports institutions is now partly owned by a crypto company. Tether confirmed the move gives them the right to propose their own candidates for Juventus's board. The company's CEO, Paolo Arduino, called it a vision for merging the passion of sport with the power of blockchain. It's not a marketing gimmick. This is a real equity investment, a signal that crypto giants are stepping into the mainstream economy as buyers, not sponsors. Juventus has more than 100 million global fans and one of the strongest brands in European football. Bringing blockchain into that environment could mean NFT ticketing, digital collectibles, or even stablecoin-based loyalty programs. If Tether manages to integrate its stablecoin into Juventus's online store or app ecosystem, it would instantly expose millions of fans to blockchain payments in the real world. Analysts say it's a sign of what's to come. Crypto companies using their massive balance sheets to acquire influence in traditional industries. It's another sign that crypto isn't waiting for permission anymore. It's buying a seat at the table. And speaking of old finance meeting new, S&P Global has just unveiled something huge, a brand new index called the Digital Markets 50. It mixes 15 top cryptocurrencies including Bitcoin, Ethereum, Solana, and Avalanche, with 35 publicly listed blockchain and AI-related stocks. Think Coinbase, MicroStrategy, and Nvidia, all sitting next to major tokens in one tradable benchmark. This is exactly what Wall Street needs to feel comfortable with digital assets. Something structured, trackable, and familiar. Analysts are already calling it the S&P 500 of crypto. The launch could pave the way for new financial products, futures, derivatives, even ETFs, built directly on top of this hybrid index. A strategist at Barclays summed it up. This gives institutions a way to treat digital assets as an industry, not a novelty. While Wall Street builds bridges, policymakers are testing crypto on the ground level. In New York, a new social experiment is making headlines. Hundreds of low-income residents are receiving $12,000 each in USDC stablecoins. The project, run by GiveDirectly and Coinbase, is designed to test whether blockchain-based aid delivery can outperform traditional banking. For the participants, it's a lifeline. For crypto, it's validation. Payments arrive instantly, there are no middlemen taking fees, and everything is transparent on-chain. Recipients use wallets to pay rent and groceries directly, with fewer delays and no paperwork. It's a small program now, but if it scales, it could change how governments and charities distribute money forever. And it's a perfect moment to pause for a reminder. While adoption grows, security should always come first. Whether prices rise or fall, the only way to truly own your crypto is to hold it yourself. I use a Ledger wallet for that reason. It's offline, secure, and trusted by millions worldwide. If you want the same peace of mind, grab one using the link in the description. Protect your coins before the next wave of volatility hits. Now let's turn to the builders powering this ecosystem, the miners. They're suddenly the quiet winners of 2025. Not just because Bitcoin's price is high, but because mining companies are pivoting into artificial intelligence. Iren, one of the biggest players, has just signed multi-year GPU contracts for AI cloud services. They're using the same power-hungry infrastructure that once mined Bitcoin to run machine learning workloads for enterprise clients. Investors love it. The stock jumped double digits, and other miners like Hive and Bitfarms followed. Nvidia, always the invisible backbone of both industries, is reportedly exploring direct hardware partnerships with major miners. The result? Mining is evolving from a single-use business into a multi-revenue powerhouse. Meanwhile, Binance's BNB token quietly crossed $1,200 this week, its highest level ever. The move came as Binance doubled down on compliance and expansion into new blockchain infrastructure. While BNB leads exchange-based assets, Solana and Tron continue to strengthen. Solana's daily active wallets just broke 1.3 million, the highest since 2021, and Tron remains the #1 blockchain for stablecoin transfers. Together, they show that even when Bitcoin dips, the underlying networks are thriving. But the most telling stat of the week might not be about price at all. It's about participation. According to new data from Coin Central, only 21% of US adults own any crypto right now. That's despite all-time high prices and endless mainstream headlines. 4 out of 5 Americans are still on the sidelines. That means the next phase of the bull run won't come from traders already in the market. It'll come from newcomers. Every week that crypto becomes easier to buy, safer to store, and more visible in everyday life, that adoption curve steepens. When the other 79% decide to step in, whether through ETFs, PayPal, or yes, even Tether's football connections, this market won't just grow, it'll transform. So yes, today's dip might sting a little, but it's a breath between sprints, not a crash. Bitcoin remains the best performing asset of the year. Institutional inflows are at record levels. Governments are testing crypto for real-world impact. Stablecoin issuers are buying football clubs. Wall Street's building indexes. If history teaches us anything, it's that these pauses are where conviction is tested and rewarded. As one analyst at Galaxy Digital said this morning, every parabolic rally pauses so the next one can start higher. Zoom out, stay patient, and remember, markets breathe. What matters is that the fundamentals keep getting stronger, and they are. That's all for today's daily crypto roundup. If you enjoyed this one, make sure to follow and drop a comment with your thoughts on where you think Bitcoin's headed next. Follow for tomorrow's update, and as always, we'll see you at the top.